Tuesday's market closes lower in livestock. We were mostly higher in the grains, except for parts of the wheat complex. Brian Grady with Pro Farmer is joining us. And Brian, corn and soybeans to the plus side. It felt like a risk-on day there, didn't it?
Absolutely. Helped tremendously by the outside markets. Crude oil with strong gains. The dollar pulled back sharply. Even the stock market was higher. And so you mentioned the risk on, definitely. Asset-based markets definitely benefited yesterday from that price movement. And really just, like you said, risk on. And the investor was wanting to buy those risk-based assets.
So let's talk about corn and soybeans in terms of the next injection of new news that we're going to need, because we can't seem to close December corn above 7 or November beans above the $14 mark. What are we going to need to get there?
Yeah, those are pretty significant technical hurdles at the moment. And I think that whatever the trigger is, the funds are going to have to be buyers and be active buyers to push us above those levels. And whether that's further easing of some of the global economic concerns, those have been running high and really taming buyer interest. So maybe if we ease it back just a little bit, monetary policy, the expectations of the central banks around the world, including the U.S. Fed, will continue to tighten their monetary policy or raise interest rates, but maybe at a lesser pace than what we have been seeing. And so maybe that encourages just a little bit more investment from the speculative side of the market.
Higher crude oil as well, with expectations of OPEC cutting production by, 1 million barrels a day. Is that right?
Yeah, and so we'll see if that has much impact on prices or not. It's psychologically supportive here ahead of that decision. But when the decision comes, will we see additional buying? And that's really key, because as much as the dollar influences commodity prices, crude oil is still the king within the commodity complex. And so whatever crude oil is doing happens to have a great influence on the rest of the commodity sector.
Yeah, definitely. It's certainly why I brought it up. The corn and soybean market as well. We are getting into the harvest, or the onslaught anyways. And so is the market also waiting to get confirmation of whether these yields are getting bigger or smaller? And what do we see as we go into the October WASDE in that vein?
Yeah, I think that it's a critical decision for USDA coming up on the 12th in terms of what they do with the yields. There are some better than expected yields out there, most definitely. I think the biggest one is probably corn. It wouldn't be too much of a surprise to me anyway if we saw soybeans tick up some on the yield. But corn, the expectation has been that we'll continue to see yields come down through the harvest season. So if USDA does make an upward adjustment there this month, I think that would catch the market by surprise and probably cap the upside at least short term here.
Would that perhaps be offset because we're going to have less carry in because of the quarterly stocks?
Yeah, absolutely. September 1 stocks, so the ending stocks for 21-22 came in well below expectations. And so we will have a tighter balance sheet. So that could offset some of that. But I still think that the market is very immediate in terms of what they know and the data they know. And as a result, that crop estimates can be front and center. The longer term picture they feel like they can deal with over the course of time, I think. And so, interesting dynamic there. No doubt that the ending stocks will be a bullish number, or should be a bullish number.
Right. So the wheat market feels a little tired, just like corn. We can't seem to close Kansas City, Minneapolis wheats above those $10 mark. So what we've got, most of the Ukraine concerns kind of factored in here already?
Yeah, wheat has been the leader to the upside here recently, and like you said, it's just kind of stalled out, and we have some demand concerns. If you look back to the September 30th reports, the crop estimate came in much smaller than anticipated, but yet September 1 stocks came in right at expectations. So that implies that first quarter wheat use was even poorer than what we anticipated. So wheat's problem right now is it's not priced as a feed and it's not priced as food to export. So we just don't know where the demand is going to come from. And until we solve that situation and the U.S. becomes competitive, or wheat becomes competitively priced, we just aren't going to have a big upside push, I don't think, in the wheat market.
Okay. Winter wheat plantings behind. We've got a lot of winter wheat areas that are really dry. Is the market concerned about that?
Oh, I think concerned. It's usually pretty hard and difficult to get the market too concerned about winter wheat in the fall. Even through winter, even if in the years where we have poor establishment in the fall and then rough winter conditions, the market just doesn't get too jumpy. They anticipate that the conditions will get better as we move through spring, and that's kind of the longer term forecast when we look out and project out that La Nina will end sometime in that late winter, early spring timeframe. So I think that is probably in the back of traders' minds right now, if not even in the forefront.
So drought impacting the Mississippi River water levels as well and barge traffic. When is that going to show up on the export inspections?
Oh, I think that we already have some issues there. Basis is probably the biggest impact that we will see, and if we don't get some rains to improve those and heavy rains to improve those water levels, this is going to be a transportation issue. And when you get into transportation issues, then it becomes a wild basis swings in areas where they need supply and areas where you have the supply and can't get it moved out. And so I think that the basis market could get really crazy with the river situation.
Tuesday, a disappointing day in the livestock futures as well with what the outside markets were doing and the strength there. Is it a matter of the funds just keep liquidating here on any strength that we get in these markets?
Absolutely, and especially in hogs. The hogs was really disappointing. So we had the big pull down, multi-day pause, and then we had a bearish breakout from that bear flag formation. So that projects us down to the contract lows now. So what's already a pessimistic situation has an opportunity to become even more pessimistic short term here. And attitudes are just really bad right now in the hog market in particular. Cattle, that we should see the cash market strengthen as we move forward here through the end of the year and into 2023, just based on a number standpoint. But when the hog market's selling off like it did on Tuesday, then you have issues with spillover and those types of things, and it becomes hard to get the buyer interest in the cattle market.
Plus, lower supply is being offset by lower demand concerns, right?
There are those concerns out there, most definitely, and the dollar weighs on some of that with the export side of things. Beef in particular has had very strong export demand, and domestic demand. There are concerns there on the recession side, although historically beef demand has performed pretty well during recessionary periods.
Well, appreciate your time. Brian Grady, editor of Pro Farmer.